Hello and welcome to this edition of Capital Market. I'm Temple Ashaju. The Monetary Policy Committee of the Central Bank will hold its sixth and last meeting of the year to deliberate on major developments in the global and domestic space in order to review its policy stance. Since the last MPC meeting in September, the global risk atmosphere and policy outlook have seen some unexpected changes, such as the emergence of Donald Trump as the president-elect of the United States of America, as well as the growing resentment in the global bonds market. Capital market performance has also remained abysmal since the last MPC meeting, as investor sentiment in the bonds market remained weak and appetite turned soft at the equities market, declining 9.3% within the period in question. This leads us to the focus of our program this evening. During the week, the announcement of Ashoka Cement delisting hit the market. The board of the directors had passed a resolution to propose a voluntary delisting of the company from the Nigerian Stock Exchange. The proposal offers two options for shareholders to make their exit. Also, the NSE announced a suspension on trading on Ikeja Hotel PLC. What informs these decisions and its implications on the market will be examined this evening on Capital Markets. But first, let's pave the way with some stories that we have in the news. Now, despite the financial difficulties facing the country, the Securities and Exchange Commission is vigorously pursuing its capital market mandate. That's coming from the Director General of the Commission, Mr. Munir Gwazo. He gave his assurance after an interactive session with the House of Representatives Committee on Capital Market and Institutions in Abuja.
Apart from doing that, we have also vigorously been pursuing our capital market mandate, which is investor protections and capital market development, and you need resources to do that. So even within that limited resources, we've been able to do that. I'm sure most of you have followed most of our initiative from last year to this year with respect to electronic dividend, dematerialization. We set up the National Investor Protection Fund, and so far we have paid over 3,000 beneficiaries. We launched the Corporate Governance Scorecard. We have set up committees to review all the laws in Nigeria, and they all cost money. So, yes, we, in every institution, every government institution, 70% or more goes to personnel costs, but we have, judiciously utilized the balance in terms of our initiatives. Yes, we are going through difficult times because the market is not where we expected it to be, but it's a reflection of the state of the economy. It's a reflection, of the state of the world economy. It's not only in Nigeria. If you look at other countries too, they are going through difficult times. And the only unfortunate thing is the major regulator of the capital market, which is SEC, relies heavily on what the market is able to make.
And ahead of the federal government's unveiling of an economic recovery plan next month, capitalists have begun to share their expectations on the blueprint. One of such is the perspective of the chairman of Lafarge WAPCO PLC and the chief executive of Chapel Hill Denham Advisory Bank, Mr. Bolaji Balogun. He says improved attention for currency management, infrastructure development, and of course education are some of the elements he expects to see in the document.
That economic recovery plan doesn't talk about, for example, around currency. There would be a big gap there. Secondly, you have to figure out how you begin to get finance into infrastructure, because truly the only thing that allows you to diversify an economy properly is to build infrastructure. Agriculture is low value unless you build power and you build transportation networks. What allows you add value to a basic farming product is power. What allows you preserve it, to process it, and then it becomes more valuable is power. What allows you take it from a farmyard to a city table, or to take it from a farmyard to an airport or to a port to export it, is transportation networks. So whether you like it or not, we're going to have to deal with that infrastructure issue, and we're going to have to deal with it very, very quickly. But in dealing with physical infrastructure, you must also realize that if we build all of that physical infrastructure and we don't educate our people, then we haven't truly delivered a productive economy. And addressing social infrastructure, particularly education, and how the government will ensure that some of the social intervention plans that they have are focused on getting things like school enrollment, numbers up, I think those things are pretty obvious. So if you see the plan and you don't see a few of these features, then we should be worried, but I'm sure they'll all be in there.
And business continuity planning is one of the aspects of risks and information management in the capital market. This week, the Nigerian Local Boss organized a meeting on the need for operators to upskill their knowledge in information management. During the session, the example of the NSE business continuity plans was explained.
He said you have to conduct periodical tests. We also have to ensure that we understand the techniques, what are the critical applications, the system, what are the things that if it goes down, its impact on our business. We also have to identify that. And at the same time, we also have to identify needs and push for bigger budgets. I know, people don't like this one, but it's just the truth of the matter. We just have to mention it. You need a budget to be allocated for business continuity, for it to be robust enough to at least to withstand the days of danger when it eventually happens. Then, in conclusion, it is no longer acceptable for executives to say they don't understand cyber or its threat to their organization. Protecting your bottom line is very key. And not only that, you have to begin to look at your cyber assets. You have to prepare an effective response plan. Most breaches will have a detrimental effect on a company. Today's CEOs must understand this threat and provide assurance for their various stakeholders.
And as we stated earlier, the move by the directors of Ashaka Cement PLC to delist their shares from the stock exchange rattled the market this week as shareholders were invited to tender a voluntary delisting of the company from the floor. Ashaka Cement had a mandatory tender offer